Hello, this is Steve Malone with CompsFX. Hope you're doing well today and you get some good trades. One of the traders in my live active trade room asked me if I would do a quick review of the average daily range. What is it and what techniques do I trade based upon the average daily range? So grab a pen and paper and let's go through this. The average daily range is simply the average high to low day after day after day. Now, what some refer to as the average true range, which is the difference between the daily high and the daily low. So let me be a little bit more clear about this. Suppose for the moment we're looking at the euro yen here, and the euro yen trades for the next 5 days from 106 to 105. That's all it does, day after day after day, 106 to 105. That's 100 pips. And if it does that for 5 days, then I've got a 5-day average daily range of 100 pips. Pretty simple. However, it's just not that simple when it comes to trading and when it comes to the market, because oftentimes what will happen is that average daily range will expand or contract depending upon the marketplace, depending upon economic events or news that comes out. We can see the market shift. We can oftentimes see the market make a strong move one direction, and we shift out of a normal range cycle into another range altogether, maybe another 100, 150 pips away. And that can cause an explosive move one way that is beyond the average daily range. So let's discuss the techniques for trading the average daily range. There's 3 specific techniques. First is you want to look for a bounce. When the market makes its move of its average daily range, look for a bounce. Unless there's some sort of economic event that would cause it to continue pushing beyond the average daily range, which is the second thing I look for, a continuation. So let's take a look at the euro yen, and let me give you my ideas about trading the average daily range. You can see that we started out here, we went up and down, created a little small range during the Asian session. Then as Europe got going, we made a push up to a high point. As a matter of fact, the market came up to the average daily range high target within the average daily range pro calculator. This is a calculator that we developed at CompsFX that helps define daily high and low targets, and also define what the average daily range is over a period of time. And you can decide for yourself if you want a 5-day, a 7-day, a 20-day, a 30-day, whatever number of days you want in the average daily range calculator. This is the full showing of it here with today's high, low, pips to the high, pips to the low, the targets that we had, and where we are in relationship to those targets. Now we can see that the market moved from this high point, then it retraced. It bounced off the high here and made a push down. Now the average daily range is 94 pips. So I'm looking for the market to basically go 94 pips back from this high. Well, 94 pips is right about to our ADR low target. Not exactly, but almost right there. However, what happened today is we saw it not only get to the other side, but then it continued making a push down. And we went about 142 pips today to this low point. And usually what I find is when the market stretches the average daily range, there is that natural tendency for it to retrace or move back towards center. And that's what it's doing. It moved back towards the ADR low target today. Now, it was sitting just fine right here, and we have this one big candle right here. What happened there is the ADP employment change number came out today worse than expected, and it caused that immediate drop in the dollar yen, and we saw this additional push down. Had we not had that, there would be a likelihood that we could have just settled a little bit up and down right here, maybe retraced a little bit higher up. So again, when you reach the ADR level for the day, in this case we reached the 94 pips, look for a bounce back towards center, unless there's some economic event that's going to drive it further. In this case, we had that ADP announcement and we pushed lower, but we settled back towards the ADR low target. Now, if you look at the Aussie dollar, today the Aussie dollar has a 5-day average daily range of 83 pips. That means over the last 5 days, we've averaged about 83 pips. However, looking from high to low today, we only did about 70 pips, not quite the distance. Why? Well, that has to do with what took place yesterday. Usually when the market makes a very strong move on a day, expect the following day for the average daily range not to be hit, for the market to stay within the average daily range. So in this case, we made a pretty strong move, 124 pips, due to the Reserve Bank of Australia cutting their interest rate by 50 basis points. And so as we go in today, I don't expect as big a move. I expect sometimes that when we have a big move one day, the following day not to have as big a move, and maybe not even a day to where we hit the average daily range. After the Asian session here, during the European session, we did drop down and we reached our ADR low target that the average daily range pro calculator gave us based upon the Aussie dollar's movement. And again, if you're interested in the average daily range pro calculator, which is very similar to a tool used by Wall Street, go to www.compassfx.com/ADR and you can learn more about it. I've got a video there that describes more about the average daily range and specifics about the calculator. Now, there's one more thing when it comes to trading the average daily range. We've talked about that we can get a bounce and a move back towards center. We've talked about that the market could break because of some economic event like we see in the euro yen, but there are going to be times where the market's going to do one of these numbers. It's just going to go sideways. And literally from high to low today, we're only about 36 pips, and the Aussie CAD has a 5-day average daily range of 75 pips. Well, what do you do in this situation? What I look for is if the market makes a sideways move of 50% or less of its average daily range, the following day I look for a strong move. Not sure which direction. That's dependent upon what the market's going to show us, but I do expect a strong move. However, I have seen it where a currency pair will go sideways for 2 days, 50% of the average daily range. It'll stay tight. It won't go any further than about 50% of the average daily range. If it does that for 2 days, on that third day, look for a strong breakout. Well, folks, that's the techniques for trading the average daily range. Look for a bounce towards center, a continuation because of some economic event or news, or a breakout if the market stays flat sideways with a 50% or less of its average daily range. And again, check out the average daily range calculator. Go to www.compassfx.com/ADR. I do recommend that you use the average daily range when you trade. There's been many times when I've traded where the market didn't seem to want to move any further. It kind of had reached its average daily range level, high or low, and it wasn't going to go any further. Take time to consider the average daily range, and I do recommend you make it part of your trading repertoire. Well, folks, it's Dean Malone with Compass FX. Y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.